Whoa, whoa. You know we love talking about NEO. This is my baby on this channel. NEO's my baby. And they reported earnings in the morning. As you see, as a result, the stock was originally up 10% pre-market. And then as time progressed, it fell down. Finished at 8.5% down for the day. Pretty wild swing, turn of events there for sure, to go from 10% up to nearly 10% down in a span of a day. But that's how it goes. It's NEO stock. What do you expect from it? So we're going to look at these earnings and see what's going on. Needless to say, as I expected, what a massive report. We knew this was going to be big. Quarter two non-GAAP EPS of negative 15 cents, GAAP EPS of negative 16, which beats by 10 cents. Overall, quality stuff. A beat on an EPS standpoint is good for this company. I thought it was going to be a pretty big loss, to be frankly honest with you. I thought they were going to miss by a good margin with everything going on, but I'm pretty excited that they were able to zoom past that. Revenue, this is a huge number, and we knew it was going to be $526.4 million, up 146% year over year. Beats by $24.46 million. I mean, I'm surprised they were even projected that big of a growth, right? It's a big beat. I mean, 150% growth is not at all unexpected. We knew it was going to be over 100% because every single quarter or every single month of this quarter, they've been growing deliveries over 100%. So we knew the revenue growth was going to be at least 100%. It's good to see it being closer to 150% for sure. Gross margin on vehicles is actually positive, which you like to see that. Quarterly deliveries of 10,300 compares to 3,500 in the same quarter last year. Vehicle margin of 9.7 versus negative 24.1 of last year. So they're getting it figured out. The company's getting it figured out. We love seeing that. Let's get into a little more detail here. So, overall, on the quarter, they sold 8,000 ES6s, 2,200 ES8s. A pretty decent product mix there, all things considered, to see the ES8s finally start to sell a little bit more. They're the pricier model, so it is good to see the gains. Next quarter, you're going to see the EC7, which is going to be, I think it's going to be a massive vehicle for them. I'll tell you that right now. Vehicle sales grew 177% quarter over quarter as well. Gross margin, massive numbers. Someone mistyped this for sure when they were posting this, but regardless. From Wei Fang, the CFO, with strong deliveries in the second quarter, our vehicle margin significantly exceeded our target of over 5%. Oh yeah. Attributing to the increased scaling, higher average revenue per vehicle, reduced material cost, and improved manufacturing efficiency. We love to see it. For Q3, the company is expecting to deliver from 11,000 to 11,500 vehicles, even more massive growth, around 130% growth year over year, and total revenues, I mean, incredible. They're expecting between 4 billion of this, Chinese yuan, and 4.2 billion, and only expected 3.9 consensus. Quality stuff here. Good beat expected there. Representing nearly right around 125% gain in terms of revenue. That's crazy. I don't know why they include someone's article in there. Interesting stuff. We look at their report, which we love to do. We take the word, we're not taking the horse's mouth for the words. I don't remember what that saying was, but I said it. Don't take the words for the horse's mouth. I don't know what that means. I think I made that one up. But that's okay. Overall, definitely I like to look at this loss from operations number here. $164 million lost. Could be a lot worse, all things considered. But it does present a decrease of 26% from the first quarter of this year as well. So it is progress there. and a decrease of 64% year over year. So the company's making tremendous strides in that aspect, and that's really what you want to see is they're growing massively, massive growth. I mean, you can't lie about that. It's good to see from massive growth, you see growing profit. Growing profit. Can you believe it? I can't believe it. Growing profit. It's great. Soda. So, not bad as far as net loss is concerned. Definitely good to see a big decrease overall. I mean, that vehicle margin, too, is just a massive change. You see from last quarter, negative 7.4. Same quarter last year, negative 24%. And now this year, 9.7% this quarter. Really nice to see that. And overall, your loss from operations, you see decreases all over the board. All over the board, which is that's absolutely what you want to see. It's absolutely what you want to see a growing margin, which they're doing, and a decreasing net loss. What a lovely time. As far as July deliveries, which we talked about previously, 3,533 vehicles, representing a 322% year-over-year growth. Very nice. NIO also launched the EC6 on July 24th. The 5-seater premium smart electric SUV starts at a pre-subsidiary price of 368,000 renminbi, I believe is how it's pronounced. But pretty much it's comparable to the ES6 price for the most part. Pretty comparable as far as that's concerned for base models. So sporty coupe silhouette, excellent lightweight architecture, and drag coefficient of just 0.26. Oh gosh, you can zoom in this thing. You can definitely zoom in this thing. Excels in performance, really nice performance on this vehicle. Definitely excited to see that EC6 and see what it can do. Very exciting. I think I want to skip down and talk about the balance sheet, because really they're talking about the deliveries. We saw the future expected for the quarter. We looked at that already. I do want to look at the balance sheet because that's important. Now this is definitely in renminbi, so you gotta know that is the case. So not quite the dollar-wise you're looking for, right? Dollar-wise, it's Pennywise the Clown, but not. So overall, we look here and we're going to take just a peek, and you see the total current assets position jumped massively, tripled. And all that is really because all of the cash and cash equivalents that they cashed in on to really stay afloat, you know what I mean? This is the cash they raised so they could stay in business. So total assets in general saw a big jump as well, right at 3.2 billion right now. It is a good amount of assets. Total liabilities, though, you need to mention that. Total liabilities in general is at 3.2 billion. So that didn't jump nearly as much as you saw the assets jump, which is a very big thing. Assets jump by way more than liabilities. So now we actually have a stockholder equity on this. That's right, no deficit, no stockholder deficit on the stock right now, which is a massive change for this company. 3.2 billion in liabilities versus 3.27 in assets. It's a change that is incredible for this company, and if you're a shareholder, you should be very excited. And I think obviously the conversation comes of what's the price for this stock. So if you know, I sold the majority of my position at the $15 mark, right? I sold 3/4 of my position at the $15 mark. Not that I'm super happy to have done it. This is a stock I really want to be in. I am not ready to buy at these levels. If it falls anywhere under 10, I will be buying this stock, I think, big time, because the future for this in the next 5 years is going to be massive, I believe. The potential for this stock is incredible. Even if you buy it at these levels, I get it. But I think I have better places I can put my money right now as a risk-reward scenario is concerned. But I do think this company's got a lot of potential, and that's why I still held on to 1/4 of my position. and I'll be holding on to it for the long term and just seeing where it goes, So overall, hope you enjoyed and have a good one.